obviously these next, what we're going to deal with here isn't cases, I guess, but we'll get maybe honorary case status, I guess, because there are precious few amounts of guidance on 1202, I guess. So maybe with that, why did you pick these two PLRs, and what the heck is 1202?
For the exact reason you just said, because anytime we get any guidance on 1202, it's got to be celebrated. It's got to be acknowledged. All right. Well, I appreciate what you said about the 1202 article. And the reason I wrote that 4 years ago, maybe 5 years ago, is because I was I was teaching at the DC Bar Association. There was like maybe 80 attorneys there in the DC area. And halfway through the day, I was touching on 1202, and I asked for a show of hands. How many people had ever worked in 1202 or were aware of what it did? 3 hands went up, and it just scared me to death because it's such a powerful provision. Now, I will say I've continued to ask that question over the years as I teach, and it's getting so much better. Every year more hands are going up. But I know it's not great because that article you just referenced, there is not a week of my career, and I'm not making that up, that goes by that some CEO or some founder or someone somewhere doesn't call me because of that article and say, my accountant's not familiar enough with 1202, can you help us out? And so I know it's taking food off my table theoretically, but we got to still spread awareness of 1202, okay? And so are these two PLRs earth-shattering? Absolutely not. Do they give you and I a platform to raise awareness on 1202? They do, and that's what we're here to do, right?
All right.
So think about it, right? You've got a provision that a lot of people aren't aware of, but that provision says if you acquired certain stock after 2010 and hold it for 5 years, you can exclude 100% of the gain up to the greater of $10 million or 10 times basis. And my response to that is, where else are you getting that in the Internal Revenue Code? Where else can you start a business in 2011 for $100 of stock, right? End up selling it in 2018 for $14 million and exclude $10 million. Pocket the cash and pay no tax on $10 million. It doesn't exist. You can't. Like we're going to talk about with the Cubs, if you want cash, you're paying some tax or you're going to end up in tax court. And so we need awareness of this provision. We don't have enough awareness about this provision, but what we really don't have enough of is guidance, okay? Why not? I'll give you the brief condensed version. This law was added to the code in 1993, and it said at that time, stock issued after today, held for more than 5 years, you get a 50% exclusion. And back then, the cap gains rate was 28%. So a 50% exclusion means you're paying an effective rate of 14% instead of 28%. We're on board with that. That's good. But you had to hold it 5 years, which means you couldn't possibly sell until 1998. Well, guess what happened in 1997? Congress lowered the cap gains rate to 20%, but they said any 1202 gain that's still includable because of the 50% limit remains subject to a 28% tax rate. So I'm no genius, Damien, but if you're paying a 28% rate on 50% of the gain, that's a 14% effective rate. So now you're comparing a 14% rate to a 20% rate. That's not all that exciting. And then guess what happens in 2003? They drop the cap gains rate to 15%. So now you're comparing 15 to 14, and no one cared about 1202. And so no one used it. And because no one used it, we didn't get any cases. We didn't get any rulings. And then in 2009, they tried to breathe life back into it. And they said for stock acquired after this date, hold it 5 years, you can exclude 75% of the gain. Great. Then the real miracle happened in late 2010 when they said stock acquired after this date and held more than 5 years, you can exclude 100% of the gain. 100%. Okay.
Huge.
So those stocks started to be sold in the tail end of 2015. And that means they were reported on a 16 return, maybe picked up for audit a couple years later, maybe just kind of working their way through the courts now. So when I say there's no guidance, Damien, it's been around since 93. In that period of time, we've got one court case and what amounts to now, after this year, 5 private letter rulings. That's it. In almost 30 years. You and I talk a lot in this podcast every year about the real estate professional rules. Also added in 1993, one case or 5 pieces of authority, that's one good month for the real estate professional rules.
Right. Yeah.
Yeah, you've got this area of the law that's basically been dormant. And now all of a sudden, it's this huge incentive. Now, the unfortunate part is the proposed reconciliation legislation would say for sales after September 13th, 2021, if your taxable income, including the gain from the stock we're talking about here, is over $400,000, we're going to send you back to a 50% limitation. So we don't know if the Senate's going to pass it anything, but if so, if that 1202 piece will be in there, but we may be looking at a haircut on 1202 again. But we still need to raise awareness, right? Because it's still significant. Couple just things, right, to know about 1202. First things first, there's certain tests that have to be met on the day you get the stock. 3 things that we'll talk about quickly. Number 1, it's got to be stock in a C corporation. No S corps, no partnerships. And the day the stock is issued, it's got to be C corp stock. So what you can't do is form as an S corp, wait 3 years, someone tells you about 1202, and then you revoke your S status and say, now I got 1202 stock. No, you don't, because the day it was issued as an S. You got to issue it as a C. Okay, number 1. Number 2, you got to, just like 1244, you have to acquire the stock at original issuance directly from the corp. I can't buy Damien stock. I got to get stock from the corp in exchange for cash, services, property, exercise of option, conversion of a note, right? Directly from the corp. Number 3, it's got to be qualified small business stock, so it's got to be small. 1244, we said small was under $1 million. 1202, much more forgiving. Small means immediately after you acquire your stock, the total basis of the assets of the corporation under $50 million. 50 million, not value, basis. I mean, that's huge. You can have significant intangible value and still be a qualified small business corporation, okay? Then we have certain tests that have to be met for substantially all of your holding period. And this is where more of the gaps in the guidance start to really reveal themselves. Probably the most problematic aspect, which we won't really get into today, is similar to that operating company rule for 1244. They want 80% of your assets to be used in the active conduct of a trade or business every single year. And it can get a little wonky because after 2 years, cash can only count towards a certain amount of that test. And then, real estate can hurt you. Corporate subsidiaries, if you don't own more than 50%, can hurt you. And it's based on value. So somebody's got to actually value the company every year because that intangible value will all count. And so you can have a balance sheet that's 100% cash and looks very damaging from a 1202 perspective. But if you have this intangible value that you can't see on the balance sheet, you might be just fine. So there's a lot of gaps in the guidance there. The second thing that has to happen for substantially all your holding period, you obviously have to be a C corporation, so you can't flip to an S like a year later. And then the third thing, and this is where these rulings come in, is you have to be an eligible corporation. And that just means like no discs, you've got to be a domestic corporation, but then most importantly, right, certain businesses are out. And when I say this, I know I run the risk of giving some of your listeners PTSD, but what businesses are out, buddy? It's going to sound really familiar. Businesses in the fields of health, law, accounting, actuarial science, engineering, architecture, consulting, brokerage services, financial services, right? Or the dreaded any trade or business where the principal asset of the trade or business is the skill or reputation of one or more of its owners and employees. Where do we hear that? Why will it give people PTSD?
I'm looking for a fella. Goes by Cupid. You know him?
Yeah, who doesn't? What about him?
So we've spent so much time in these terms under 199 Cap A. 199 Cap A did not create those terms. They borrowed it from 1202E. Now, 1202E is more expansive. So you heard me say architecture and engineering. They got plucked out for 199A, but they're no good for 1202, right? Restaurants, no good. Farming businesses, no good. Hotels, motels, no good, all right? But the conundrum here is that with 199A, there was this immediate rush and point of emphasis to get regulations that painstakingly describe all of these fields under the regs at 199A-5. But here we are 30 years later under 1202. We have no idea what these terms mean for 1202 purposes. And 199A says, hey, these regs are for 199A purposes, nothing else. So what happened this year is we got 2 rulings under 1202, and I'm not kidding. You and I, we're joking about it before, but like when I see 1202 in a weekly IRS determination, my eyes light up, because any guidance we can get, we need. Now, again, this isn't earth-shattering, but I do think there's something important we can extract from that. These are 2 rulings about whether or not we're in one of these bad fields, one being health, one being brokerage, okay? And in the field of health, you had this company that basically doctors would come in and meet with a patient. The doctors weren't with the company. A doctor and a patient would meet, and they'd say, you need this piece of equipment to help you get better. And then they would go to this company who would, make custom equipment to help somebody in their therapy or rehab or whatever it may be. So the company we're talking about is in, customized construction. They're not doctors. They're not meeting with patients. They're just helping patients get better tangentially. But they were concerned they were in the field of health because of that tangential relationship to the doctor-patient relationship. And so they went in for PLR. And to me, the single most noteworthy thing about these 2 PLRs is when they got around to discussing the relevant law, they don't just simply say, let's take a look at the 199A regulations, right? So that tells me they're not beholden to those regulations. They're going to interpret 1202 how they see fit. Now, that being said, they followed the same line of thinking that we saw in 199A, which we would expect. They said, look, you're not directly meeting with patients, right? Yes, you're tangentially involved in their therapy, but you are not, you are not someone here who is sitting down with patients and providing medical advice. You don't have a license for any of that stuff. You're just building stuff out to help. So don't worry, you're not in the field of health. So that was 2021-25004 that told us that. And again, is it earth-shattering? No. Did it give us a chance to talk about 1202? Make sure everybody's aware of it? Yeah, I'm excited about that because, like I said, we need more awareness. I got a phone call maybe 3 years ago from a guy who started a company in Silicon Valley and sold his company. I'm not making any of this up. It's not one of those stories I use just to illustrate a point. Sold his company after 4 years and 9 months of holding period for $16 million. No one had ever even told him about 1202. Okay, you know what? And then I don't want to go charging down this path, but no one had told them about 1045 either. And we're not going to talk 1045 today, but just make sure everyone's aware. If you have qualified small business stock, but don't get to a 5-year holding period, you're not dead. 1045 would allow you to roll that those proceeds over into replacement QSBS and preserve your potential exclusion. It's a very short provision. It works hand in hand with 1202. Again, all I care about is awareness. And then we have the second PLR 2021-14002 that just dealt with brokerage services. And you had a company that worked with clients to obtain insurance, like property insurance and casualty and all that stuff. And they would go to the insurance company and get paid a commission if they brought clients on, but they had other duties. They had to maintain, or they had to report to the insurance companies any accidents or claims or incidents or suits or whatever it might be. They had to keep records of all transactions that occurred with the insured. And so they were concerned that they were a broker under the meaning of 1202E. And once again, they could have gone straight to the 199A language, which says, hey, brokerage services is very narrowly defined, right? Buyers and sellers of securities is what 199A regulations ultimately said. And so they could have done that. They didn't. Instead, they said, what's the plain language definition of a broker? It's someone who, acts as an intermediary, and that's it, between buying and selling parties. That's not what's going on here. You're doing more than acting as an intermediary because you're keeping these records, you're reporting incidents and transactions, you're taking on ancillary roles that are above and beyond what we expect from a normal broker. And so you're not a broker. You're okay for 1202. And again, the big takeaway from that, Damien, is why not, right? We got this whole body of law under -5 of 199A. They don't even mention it. They're crafting their own rules here, and all that does is spark even more concern for those of us who work in 1202 world all the time, because it means we better be pretty cautious before we go relying on the body of regs under 199A or even 448. I mean, it just looks like 1202 is going to be its own animal.
Maybe not surprising because, like you said, the preamble, the 199 Cap A regs say
That's it.
can't use it for that purpose. But yeah, if you're looking at the definition of health, you'd think you could maybe lean on it a little bit, you know?
I mean, if you're going to spend all that time, right, let's use it for multiple purposes.
Leverage here. Come on, you know?
I know.